This podcast is brought to you by Three Rivers Energy Partners. In today's episode of Digest This, global energy investment set to rise to $3.3 trillion in 2025.
The U.S. nearly tripled its solar PV module manufacturing capacity to 42 gigawatts in 2024.
Data center operators are now competing with utilities for the same electrical equipment, especially transformers. Welcome to Digest This, Unpacking Our Sustainable Future, where we dive deep into the latest developments in sustainability and renewable energy. Join us in exploring the pioneering solutions and technologies that are shaping our future. Now, let's dive into today's episode.
Hey everyone, welcome back to Digest This, Unpacking Our Sustainable Future. I'm Alex, and as always, I'm joined by Emily. Emily, how's it going?
Hey Alex, I'm good, thanks. Excited for today's episode? There's a lot happening in the energy world right now. Today we are going to be breaking down the recent press release from the International Energy Agency, or IEA, about the rise in global energy investments. The headline reads, Global Energy Investment Set to Rise to $3.3 trillion in 2025. That's a number I still have to say twice to believe.
Yes, it is. And what really stands out is that $2.2 trillion of that is going to clean technologies. That's not just renewables, but also things like nuclear, grids, storage, efficiency, electrification, the whole package. It's like we're finally seeing clean energy outpace fossil fuels in a big way.
Absolutely. And if you zoom in on the regional shifts, China is dominating. They're now the world's single largest energy investor, and they're responsible for almost a third of global clean energy spending. That's a huge leap from where they were a decade ago.
Right, and I always find it interesting to compare China's approach to what's happening in the US and the EU. China's investing across the board: solar, wind, hydro, batteries, EVs, you name it. Meanwhile, the US is making a big push in renewable manufacturing and LNG exports. According to the IEA's World Energy Investment Report for 2025, the U.S. nearly tripled its solar PV module manufacturing capacity to 42 gigawatts in 2024.
That's right. And the U.S. is also home to about 8% of global lithium-ion battery production now. But China's scale is just on another level. They're spending almost as much as the EU and U.S. combined. It's a bit mind-boggling.
And then you look at where the money's actually going. Solar PV is the big winner. Investment in solar is expected to hit $450 billion in 2025. That's the single largest item in the global energy investment inventory. And batteries are surging too, above $65 billion this year. It's like, if you're not in solar or batteries, you're missing the party.
It's true. But there's a catch, right? All this money is pouring into generation, solar panels, wind farms, batteries, but grid investments are lagging behind. I think grid spending is around $400 billion a year, which sounds like a lot, but it's not keeping up with all the new generation coming online.
Yeah, and that's a real problem. If grid investment doesn't catch up, we could see electricity security issues by the early 2030s. It's like building a ton of new houses, but forgetting to widen the roads. Eventually, you get traffic jams. And in this case, it's bottlenecks for getting clean power where it needs to go.
Exactly. And it's not just about money either. There are these long permitting processes, and supply chains for things like transformers and cables are really tight. So even if you have the funds, actually getting the infrastructure built is a whole other challenge.
Yeah, and I mean, we're seeing electricity investments now about 50% higher than what's being spent on oil, gas, and coal combined. That's a huge shift from a decade ago when fossil fuels were still king. But if the grid can't keep up, it's going to slow everything down.
And that's a perfect segue into the next big challenge, how these grid issues are playing out, especially in emerging markets. Should we dive into that?
Yeah, let's get into it. So one of the big questions is, why is grid investment lagging behind generation growth? I mean, we've got all these new solar and wind projects, but the wires to connect them just aren't being built fast enough. And that's risking electricity security, not just in the US or Europe, but globally.
Right. And it's especially tough in developing economies. Take Africa, for example. The continent has 20% of the world's population, but only about 2% of global clean energy investment. That's a huge gap. And total energy investment in Africa has actually fallen by a third over the past decade. It's not just about lack of interest. There are real barriers to mobilizing capital for infrastructure.
That's where development finance institutions come in. They're supposed to help bridge that gap, but honestly, it's not enough. The IEA report says international public finance needs to be scaled up and used more strategically to bring in private capital. But, easier said than done.
Exactly. And even in places like the US where there's plenty of capital, we're running into grid bottlenecks. I know you've been following the data center boom, Alex. How's that playing out?
Oh, it's wild. So, with the explosion of AI and cloud computing, data centers are popping up everywhere. But these things use a ton of electricity, and companies are scrambling to lock in clean power. The problem is the grid can't keep up. In the US in 2024, the wait time for a grid connection was 1 to 3 years, and in some hotspots, up to 7 years. There's 205 gigawatts of solar and wind just waiting to connect. And get this, data center operators are now competing with utilities for the same electrical equipment, especially transformers. Some wait times for those are as long as 6 years. It's not great.
That's a huge issue for corporate sustainability strategies. If you can't get the power you need, or you're stuck waiting years for a connection, it really changes how companies plan their growth. And it's not just a US problem. These kinds of bottlenecks are showing up in lots of places where demand is growing fast.
Yeah, and it's not just about building more wires. It's about reforming how we plan, permit, and finance grid upgrades. Otherwise, all this investment in clean generation could get stuck in limbo. And, the US is also still investing heavily in LNG exports, which adds another layer of complexity to the energy mix.
It's a balancing act, for sure. The US is trying to lead in renewables and manufacturing, but also in LNG. Meanwhile, emerging markets are struggling to get the capital they need just to build basic infrastructure. It's a reminder that the energy transition isn't happening at the same pace everywhere.
Yeah, and I think that's a good place to wrap for today. The money is flowing, the technology is advancing, but the grid and the policies around it are the real bottleneck now. We'll definitely be keeping an eye on how this plays out, especially as new reports and data come in.
Absolutely, there's so much more to unpack, and I'm sure we'll be revisiting these topics in future episodes. Thanks for joining us, everyone.
Thanks, Emily. Always a pleasure. And thanks to all our listeners. See you next time on Digest This.
Bye, Alex. Bye, everyone.
Thank you for listening to Digest This, Unpacking Our Sustainable Future, a Three Rivers Energy Partners podcast. Three Rivers Energy Partners is a renewable energy company that empowers organizations with the ability to create a sustainable future by converting organic waste streams into renewable energy and resources. To get the latest episode of Digest This, or to find out more about Three Rivers Energy Partners, visit threeriversenergy.com or find us on LinkedIn, Spotify, Apple Podcasts, and YouTube. The sustainable future is being created right now. Keep exploring and keep up to speed with the latest in renewable energy and sustainability. See you next time.